Let me start from the top here. I'm adapting things, small things along the way in my career because I am also a student always first, no matter what. I'm not perfect. Nobody is. And if anybody claims so, run away the other direction. Don't bother. Don't be curious. Our high time frame chart. Let's start on the ES. It's all compromised now of RTH only. Okay, I've changed to RTH only so I can see the gaps. I'm not looking at electronic time frames. I'm looking at a high time frame where I can identify gaps. We were just talking about this early in the morning. Gaps below. Okay. Now, what initiated this kind of activity from a 9-day range? Well, we don't know. And an indicator doesn't tell us why participants went short. But on profiling, we see that on a macro time frame, on a macro composite profile, we had what's called an LVN here, a low volume node. Now, when after 9 days of this range, up and down, not new highs, which there's a gap to fill up that way, broke down this way, and once it gets in this level, begin for the momentum. And that's where we went yesterday and bounced off the somewhere in the 20s or 2 days ago, and we had targets here. Okay, continuation now planned for today is obviously if we're not going to turn around and the buyers fail, which is quite a big distance for them to accomplish. Now you see now we're on the other side of this low volume node. Okay, we reverse, go the other way. What's the quickest area of target? Fill in like that gap. Now, fill in the gap is not end all be all. It's not a strategy. Oh, I'm trying to. Why? Because that could take 2 weeks to happen. So we're not saying, basically, you're just a gap player. No, because they'll look at these gaps. They will take time to work. You anticipate your day when you come in and you see what you're working with. This is what we had working with in the last couple of days time frame. Okay, now, so we zoom out. Okay, we go to a 5 minute. We know we're short, but we know in the morning what's going to happen. With that overnight inventory was on the short side, they're going to get squeezed. They're going to take profits. They're going to bail out. And then you're going to also have retail buyers buying up. It's okay to trade along with it, which is what I did, because on the book map, which is a little bit more advanced, and that's why I'm not, over introducing it to a lot of the guys in our room, because a lot of guys in our room come from the algorithmic world and trying to use algo just like I did during my COVID years and 3 or 4 years towards my last tenure of trading, of making systems and models. And just all it really was is covering up that we just don't want to learn that the market is an auction and that's all it is. Okay. So to take away some of the complexity, which it comes down to, you have to learn this eventually if you really want to get in and get your best precision trade, see what's going on at that level. Level meaning a zone. Level meaning there's just a level, it's static because I didn't make it up. We're going to talk about those static things in a minute. But again, what was this quick action? And then what targets did we have? There's probabilities out there. And I don't pay for stats. I'm still not at that level of advance because I haven't accepted it. But there is other colleagues I have out there that share some stats, and usually your ETH highs, your ETH mids are stuff that'll be tested at the open. But at the open, most of the time what happens, we open up at a ETH point of control, at a ETH mid. That target's already blown out of the way, but we had overnight high. I took a trade that was it takes a little bit of guts because you're going to have to be able to have a quick stop. Bottom line, if you're wrong, you got to be wrong very fast. And it was a 12-point play from here to ETH high. I bailed out, and I don't want to play anymore because I'm playing with an Apex account that's already funded. Now, anyway, and so I don't have any other accounts to play with today for day trading. Portfolio account, I'm not day trading in there. Now, what happens, and this happens a lot of times too, if we miss the higher targets, look at NQ. NQ went up there and hit prior day high, prior week low, and at that same time, of course, that was the top of the IB. IB is the first hour of the intraday trading session, and it records after the first session is done. It's programming, right? It's moving with price during the session of first hour, and then it's gonna just lock up, and that's your IB. IB high, IB low, IB mid. Very important levels, because these levels, if IB fails, the story is that it will revert the other way and test the other side of IB. When IB breaks one side and the momentum is continuing to downside or upside, we will have what's called continuation of IB, which is breaking out and then just running. What are we to do when we see that? Like here, I'm sure some guys were, we discussed it. If you had these targets and you missed it, you had a stop out here. You gotta be able to switch your mind fast and make up. If you make up and you move fast enough over time with building confidence, you will know. Your mind, conscious mind, doesn't have to think about it anymore. It's just unconscious competence happens, and you're going to be able to reverse your bias. This is why it's hard intraday to talk every trade with you guys, because I could tell you something here, but then I might already have switched, and then it'll be on me. That's if you were following me, and I had to switch to clean up, that I left you in the dust. It's going to be that kind of feeling. So here's where you have to be, some of the independent self-trader comes in, and the psychological tests of who you are and what you want to do. And then, as I discussed earlier in the room, your why. Because if we remember why we're doing this, it's not just for the money. The money is just a derivative of what we're trying to do. And our whys are we want our little freedom with our families and the happiness, and see the smile on children's face or a wife's face or whatever on your own face. If you're that selfish enough, no problem. And you know what? But you just got to do that part. Now, again, I started, and I've work with at Bookmap part-time. I'm not an employee. I'm a contractor. And I tell you, I fought with order flow for many years to understand it, and I declined it. I didn't want to work with it. And every time I had a bad day, I'd go back to my algo and want to make an algo that's just going to dominate one way and, figure out the bias. Then after that, put it on and sayonara. But all we were doing was just hiding our own emotion by doing that. Okay? So, again, let's go back and not over talk about other thing, but this video is not to be glamorous. It's for our people that are watching, our viewers, and for our own traders. We have a small group of like-minded traders that want to be more consistent and battle their own demons and fix what they have internally and get over the past of their bad experiences and not work driving a Lamborghini looking in a rearview mirror. It won't work. And if you keep doing the same things, as Tom B from the T-Lab says in Bookmap, you'll go that constant trader Groundhog Day. Groundhog Day for me has lasted about a decade. And there's many guys out there, 10, 20, 30 years, we still talk to that are on their 40th year and have just grasped it in maybe the last 15 to 20. There's no shame in the game that you want to just keep learning and get good. But anyway, again, this is the basic tools that I have for the small time frame. Okay, every day you come in, you look at your macro, you look where you're sitting. What's my potential? So you get an outside view of the why this thing can move down. Over time, you'll learn how composite and profilings work. These are not made up. People drawing random lines or pivots could be totally made up. Okay, what one person has as the line is different from another person's line. And that 10-point differentiation could be a matter of breaking through a composite level that is going to just cause a couple of days of nice short selling momentum. Because when we break through then we have momentum. Then what's our targets? Gap fill. So you have to be a little independent and say, when this happens, what is in the way? What can I target? We failed to hit the highs, prior day high of ES. Okay, we're watching NQ. We see the ES fails. If you're watching the book, you bail out of your long. If you're long, you take your short if you were short anyway. You write it all the way down. Second trade, you can scale. I am not a good scaler. I'm an all-in, all-out guy. So it makes trading harder because that's something I'm going to have to learn is scaling. You scale, take a position off, let your runner run. If you have that going on, or a re-entry, down, target, prior day low. And of course, there's lower targets we're not going to discuss. But your high probable trades, when they set up, you want to find your closest targets. And that's about how all you do that. If you look at NQ, about the same thing. We see continuation here. Break, test the IB low, attempting to get yesterday's low. Okay? Now, funny thing it would be for NQ is that it's done both sides. Prior day high and a potential prior day low test here. Okay? So again, put things in a context. You know, when you get up, okay, we trade most of our inventory lower of yesterday's day trading range. What's likely to happen? Sellers to get a little bit of pressure at the morning break, cover their position, which they have to buy. Okay, and then also late retailers are buying maybe up here, they get trapped, professional traders take the short. You only need a couple of these a day. Okay, one or two. I've taken one trade a day for 12.5 points. I don't want to get back in. I don't want to trade anymore. I'm done. I don't want to. Do I have the FOMO feeling? Yeah. Anyway, back to the these. These are stuff, the volume profile that I add as I come into the session, and it's just a fixed range, and I pick the day session of the prior day, the RTH, okay, because I want to see where its main VPOC was. VPOCs are targets intraday at opens usually. I want to see the profile and the VPOC, volume point of control, for the overnight. These, again, are targets by statisticians. If you think it's made up, you'll see over time. Again, now I said market opens a lot of times within it's ETH mid, sometimes it's ETH point of control. But if we get away, there is stats that say at what condition state the market opens in that these levels will be tested. We're not going to get into stats and stuff. I'm still fairly new to them because, like I said, I stubbornly was declining to learn them for about 2+ years. I knew they existed. They exist because people use them. All right. So that's why I start you guys. Now, order flow traders don't use prior day high, prior day low, prior monthly high, prior monthly close, and the week. But it's very significant. You will see this time and time again in any market that has liquidity, that has good liquidity. Use these levels. Okay? Same thing here. We had a swing high that we made on our macro chart, 70.65. It was the prior month low area, and we sold on off. Back down into IB failure. Okay, so you had a good break here. If you were trading a break, target, 50 cents. Reverse if you're that fast enough. Breaks in to the failure. And another 70, 60 cents right there. That's day trading. You have to go long and short sometime, many times. But we just put it in relativity. This is why I want everyone to start with the IB, which is an order flow tool, first hour session. It's in the template I've shared with you guys. Now this green line up here is because a lot of markets, I went off on macros and I draw monthly and weekly swing highs. And the way I prefer to do it is turn that chart into a line chart, and I'll usually draw swings, just monthly and weekly swings only, not dailies, and then I'll put it back to candles. Now, this is slightly skewed down because I've changed my ETH electronic combined bars to RTH only. Okay. And I think we discussed this, and I talked about, levels to look for to buy crude again down in the 60s, which we put in our swing room or whatever I put in that stock room or something like spread chat, just to get some higher time frame charts and stuff like this. Okay. And if you don't believe me, take a look at gold, right? So, again, gold trades like nothing all night, gets up, market pit opens on gold. We make the initial balance by, technically you could say 8 o'clock, because gold opens at 7:20. So 8:20, 10 minutes before the market open, IB's done. Okay, we go, we test, we just keep failing this highs up here. This level here, this composite level here is a sell. It's much harder, when easier said than done, but then I'm looking at Bookmap, I'm looking at the activity there. And there's no expert rhyme or reason to it. You got to watch this stuff. You take your trade, you take your short break, out, IB continuation, short side. Now gold is very expensive to trade. So if you catch any of these, 5 points, it's $100 a point. If you take a pullback continuation short, now what's your targets? You had prior day high, you had the weekly open. Weekly settle. So don't be surprised, gold makes its way down here in the next couple of days and test 25.27. Why? Because market trades usually in auction like 3 days. Okay, it trades in threes almost. You'll see price open, go and test prior day low, come back, test weekly close, break above weekly close, go make some highs, take out some of the stops above, turn back down. So you get an air rate. Where does it settle back? Settles back under here. Why did the market move fast under this level? Look at the composite LVN. So now, short side into this profile, outside in trade, potential targets back down to prior week close. Right? Our week started here, this blue line. I'm a big advocate of the weekly close. You'll see markets in a zoomed out 4-day, 5-day auction work very well with these. And there's times you just get this where it's like, this is Dow, it just doesn't revisit nothing. Guarantee you Dow has some big gaps to fill if you look here. So, a lot of work Dow still has to do. Does it have to do it this week? No. But you'd be looking for targets down in here for the Dow. Now, this is your macro. It's not going to help you every day to stare at that 24/7. Once you already identify a setup, hey, look, continuation short side, we have some gaps to fill on down there, blah, blah, blah. Again, YM did the same thing. Tried to come up, take out yesterday's high, failed. Stayed most of the first initial balance under IB mid. What does that say? Sellers took over. Targets below, yesterday low. What target is under that? You'd have to zoom out. Zoom out, you got last Thursday's low. Boom, just tested. What do we mention about 5-day auction, 3-day auction? Zoom out. When you're a little bit lost, zoom out. And then you can come back and tumble yourself in the weeds. Okay? There's your target. Oh, Pete, that's hindsight. Hindsight, you keep watching hindsight, and that is what makes you good. Don't listen to the BS out there, hindsight this, hindsight that. Hindsight works if you're actively trading and taking advantage of these over time. That's what we do. And then come back in hindsight, that's like a review. You're training yourself constantly, like Michael Jordan, that you know, whenever you see stuff like this, how many times it's going to come in. You could have been here and never have formed the rest of them days. Where did this market break when we broke under that weekly prior close? Where did it have places potential to stop? Lower parts of IB, mid parts of IB. That's why I say these will help you become introduced and more sufficient inside of what auction market theory really is. And then what you can do with that information is adapt and slowly add things like Bookmap and different volume profiles and different stuff that's still additional to order flow trading. Okay, order flow trading doesn't stop with just an IB indicator and a couple of profiles. There's reason terminologies behind those. There's reasons why intraday inside of these time frames, like the guys trade over there at the T-Lab, why micro composite levels help for re-entries. Okay, you're drawing these lines that I have here manually. Micro composite, this right here, this profile is a micro composite. It's only showing what's in the screen. So if I can zoom in and get an idea, hey, I want to take continuations under the IBL, where's places I can get in at the micro formed levels, micro composite HVNs. Okay, these are high volume levels. Why is it? And I'll break it down. You want me to break it down for you the way the T-Lab does? Break, up, test, high volume, drop. It's 10 points. Comes up, high volume, break, takes out stops, more icebergs added, 1601 icebergs detected, executed, in fact, 25 different participants, a total of 1601 Sellbergs, up, fake, take out, stops, buyers are trapped, sell, 7 point, 10 plus point, you're gone. This is how I use Bookmap. Now, I, again, don't want to complicate anything, and there's a ton of other better Bookmap traders out there, but this is how I get into the weeds. But, you can learn this to do it on your own. And it all starts, and we've had traders here that have really changed the way that they look at the markets. Okay, starting with just the levels that we offer, which is an indicator that makes it for you, so you don't have to do all the work. And an IB, big deal. I think I've added something in here, IB, open, high, low, there's some swing in here, and then, okay, our visible range profile. And this is what I call my macros, because as I zoom out, and I put it even on a 1 hour, I can come out here and I can get these levels. So your next LVN, low volume node, is here. Potential targets down first into here. If I put a little box around this out of curiosity, here to here, and what does that do on our macro time frame? On our 8 hour, it kind of fills the gap. Really, the gap is almost pretty much done. And now I don't know what this was. Oh, it's just another LVN. So there will be support fighting here to get through this, just like we did on Tuesday. And then we moved through. It's going to be work. But when it gets through, there's a lot of momentum. So these are levels. Okay. I mentioned earlier putting on manual swings, and you can see here that there's a weekly swing low down here. Look at the coincidence here on the profile of how that's a low volume node, LVN. Okay, and so this is high time frame. High time frame. Come in here, lower time frame. Get into the weeds. You don't need to be less than 5 minutes. Anything lower than that, have your stuff set up. Wait for your visualization. Take a high opportunity trade. You'll know. You'll keep seeing these. And so again, guys, this video is made and broadcasted for the Viper Futures members, subscribers, loyal people that also came in during the years of our system trading and our VQS and stuff like that. Could that stuff still be used? Absolutely. I don't even use hardly NinjaTrader anymore. I have it on to execute trades. But let's take a look at the VQS screen. It's been a while here for me. Refresh, bring this recenter in. There's your shorts. I mean, we keep mids and VWAPs on our screen because this helps us know even where retail stops would be. So most retail traders do what? They buy and they put stops where? Under VWAP. They buy, same thing under VWAP. Boom, they all got stopped. They got flushed out here. So your algo, our algo, what was the calculator shortcut on this? Ruler, F3, it's the entry here, 5-point stop, 13-point target. Entry here, 5-point stop, 12-point target. Entry here, 5-point stop, whatever you want to call it, target. Okay? Now, I only made one of the longs today, which was here, and I had upper targets of the ETH high. Okay, so I was out at that first target. 12 points was more than enough for me, especially guys on a PA account that's in a funded status that I'm going to pull a withdrawal on today. In a very small amount because I want to keep building the cushion on that account, especially for days if maybe I go on tilt or take too many hits. I don't want to ever go on tilt, but, you know, the hide can come out. Anyway, so is that still possible, Pete, with this concept to do algo? Yeah, you can. You can do it on NQ. Our tools still work, guys. It's just how fast you become discretionary and decide to use them. I showed this earlier on ES. Did I do was that NQ I was showing? Hold on here. It's NQ, VQS. You just put excuse my words, you put it on shorts. Once you know. We were longs at the open, taking out higher targets in the order flow, went up, took out yesterday's high on NQ, turn around, go shorts only, and there you go. Does VQS still work for this? Heck yeah. VQS now is even working with an ATR, so it automatically is setting your stops and targets based on a 5-minute ATR. Nothing wrong with that. So our product works, guys, and it works around the model that we're thinking and what we're believing in and how we're trading. And this is what helps you stay on the right side, get consistent, and change your, look, when I first started doing this, and, it helps me to teach and make videos because it keeps me in check to not do again what I'm about to tell you. I had a hard time in the beginning changing my bias. If I was long in the morning and it just didn't work, I might have had some things here. I might have fought the market rest of the day to stay long rather than just take advantage of the harmony. The market sits here and gives you a musical note. Again, not that it's easy when you're in it, but what becomes easy is if you just keep first watching it. And you'll see this happen over and over and over again on multiple markets. Let me get into some other, if I can here. Here's a perfect example in 6C where the IB tested the prior day close, went back in. So you have what's called IB continuation. It failed, and now IB failure. Going what? Making its way up towards the mid and maybe the other side. 6C, guys. 6C. I don't know however many ticks that is by now, but that's a good trade. You make up for your loser. You get your bias out the way. Plus, you probably had a target here prior day close. Okay. And murder she wrote. Here's corn, very not as liquid. It tested its prior day low, went up. Somebody trading corn is considering that piece of information, most likely market makers. Silver. Sunday, the week opens, silver sells down. We've been talking about silver. It hit this swing low that we had as a weekly swing or, something like that. I didn't trade it. We discussed it, so nothing hindsight. We were discussing it here. We discussed it here in our room. And then, where did it come up to revisit? Of course, blew out of it and got dirty and sloppy. Yeah. Okay. It went up to the weekly open again. Coincidence? Blows up, hits this level, reverses. What do we have here? Composite LVN. So, I hope this video helps, and I'm just gonna keep making these videos because, again, another thing I want to mention. There ain't nothing perfect in trading, and sometimes what happens even with me is, whatever day I have, I just don't give myself enough credit. It's already worse enough reminding yourself how it felt to leave with losing days or losing days where you completely went on a hide. Jekyll and Hyde, where you became just a monster. Let alone not to have those days anymore. It's perfectly great to not have those as much anymore or not at all. But just even having a $200 day, which is 4 points. Let's talk about points on the ES. After maybe you started off like with 2 stops that were a total of 10 points down, and then not give yourself credit for battling that out. And that happens too, guys. You're going to go through a moment where you can create your consistency, and then it'll be hard because you will feel like, are you really getting your time worth out of these markets for what you're putting in? Over time, you'll find that it does work. Count your money at the end of the month. This week, we didn't have a very let me see if I can pull up that performance thing here. I was talking to the guys here in the room. I don't like to do a lot of this showing numbers and all that. Like it's not a boasting thing, but this is an example of like an equity curve on a PA account. Okay, now, you know, every day we made something. So we made something. There was a week I was off. I was on a trip to Mexico and in a mountain cabin trip. We were gone for a week. So cumulatively, it's like $3,500 in technically 2 weeks of trading. 2.5. As tomorrow we finish, it'll end up being like it's really 3 weeks. It doesn't sound like a lot to some people because the market and the internet, I think, has really messed people up. But it's not bad money. And in fact, if you are one of those people that are into multiple accounts, I say just focus on one account, make one account really good, prove yourself, and then you can have multiple accounts. You know, just add it up, guys. That's $3,500 every 2 weeks. If that's an average, just on one account, $7,000. That's better than most incomes around the world. And, but again, you can want to, you know, fluff that number up and say, hey, if that was 5 accounts, yeah, I mean, you're making 25, 40 grand a month. I'm not there yet. I want to sustain one account and then add them. And when I add them, not pay attention to their existence, just babysit this one account, because that's another thing. Then you fail on a couple of trades, and now you might cumulatively be counting that in your head, and that's high pressure. And if you can't handle that, just don't do it. That's why currently I'm not doing it. There's no need to waste money and hit the home runs until that one account, like I showed you that picture, is steady performance and is maintained this way. Anyway, again, guys, so I've shared with my people in the Viper group this workspace. It's called Dion Dual. You're going to have your 8-hour RTH on the side with a composite profile. You're going to have your, on this other side, just your IBL. I'm sorry, your initial balance indicator, and then your monthly, weekly, and daily high-low close. It's that simple. Again, and we set up our day and we go from there. We look at where are we overnight relative to the prior day's session, what we can anticipate, and then how we can participate. If this and that, like Tom B says in T-Lab, I'm not going to take away people's words that are coined. Tom B from Bookmap T-Lab, if this, then that, if not, then what? I used to think it sounded like the corniest thing. It is the truth. If this, I'm long. If not, I'm out. I'm going short, though. I'm not going to sit there and frail up and say, I need to take every long trade continuation from here because I've got on a bias too early in the day. Do not get into a bias early in the day. I have killed myself for doing that crap. And you will do too. And most likely you already have. That's why you're still here learning. That's why I'm still here learning. Because we're learning how to control our behavior in an environment which we can maybe call the markets efficient. But in our day trading world, it's far from efficient. There is randomness, and as smart and brilliant as you are, you have to be able to switch that on a dime and go with the context. And there's no pretty trades. I mean, I think they are, but I've only had maybe 20% of my trading is pretty and beautiful. There's no picture perfect trade. There is. Don't get me wrong. But you will get days where you don't even feel good when you're profitable. That is usually just because the markets are not perfect. It didn't give you destinations like you wanted. Because the market's doing things. There could be options the markets are thin because there might be a holiday or pre-holiday. There could be earnings coming up, and those options, when they expire, they go into earnings, they get very funky. That's going to have an effect on your futures. What you're trading here. And you go, what the hell, man? The environment's, changing is random bullshit. Well, in reality, it's just doing its thing relative to all the insanity that's out there. So, that's it. I hope this video helps. I'm going to kind of make a lot of redundant videos from here on because I don't have anything much else to share except the fact that this system works for us. It even works for guys using VQS that use it with the right intent. You may be busy on the ES, but you may want it on micro NQs because there's a lot more follow through on micro NQ's pricing, and so the algo will take care of itself. Theoretically, we can see here how so far this whole time I've been talking, this change in price has not brought NQ yet to prior day low, although we did almost tag it in the ETH. Okay. Now, that's all statistics based from here on, saying how many times in an environment where the market opens lower in yesterday's range do we get to hit both sides of the prior day high and low. Very rare it could be, but maybe there's a big odd statistic for this, and we could see this later in the day. All right. That's it. Coaching for the day here is done. September 5th. You can that way backtrack and look at all this stuff and then see what happened even after this video. All right, everybody. Good luck. Bye.